So thank you all so much for joining us today for this workshop. I'd like to take a moment to introduce Priyesh, the co-founder of Lucia, the first accounting agency for content creators. As we've talked about, Priyesh spent years in corporate finance, but over time realized that you can still provide quality services to people without the overly formal, intimidating environment that is known in that space. And at Lucia, they aim to create a space where creators can feel fully supported with a financial partner who cares about them holistically and really keeps in mind their personal and professional goals and creating custom software that can help creators toward that. So please feel free to add anything. We're so grateful that you've taken the time to teach us a bit today. And I'm going to hand it over to you.
Awesome. No, thank you. Thank you so much. I'll just share my screen. Uh,
Bill, he should be able to share his screen, right?
so, yeah. Can you guys see the full screen?
Mhm.
Yep.
Okay. Cool, cool. Yeah, I'll get started, and if you guys have any questions, just feel free to shout it out. I'm super chill, not into corporate kind of stuff. Um, as Bulja mentioned, yeah, we're an accounting agency. We provide accounting services, so it's in kind of your day-to-day accounting, to just content creators. Um, so just a little bit about myself. So I'm one of the co-founders and presenters today. I My background is accounting, so I'm a chartered accountant or CPA equivalent. You guys will be able to tell from my accent, I'm not from America, so I grew up in a country really far away called New Zealand. And yeah, I have about 8+ years experience. I've worked with companies in Australasia, Europe, and North America. Um, I studied accounting, commercial law, and tax. I find in practice it's quite helpful, like the law side of things, because oftentimes the tax code is very ambiguous and they've kind of done that on purpose. And so you kind of have to look at places and apply that to the situation. And then I also did paid content creation work when I was in college. So I used to create these educational resources like tutorial videos and write the exams. And then they would go online and then people from high school could kind of pay a certain amount and then they could watch the tutorial videos and then if they wanted to sit the exams. So it was quite good for students who might have done the exam in class, they didn't get the grade that they wanted, or someone missed out on sitting the exam. And at the time, it was quite cool because exams weren't done online. And then outside of work, yeah, I enjoy skateboarding, cars, and then watching boxing. Then we have three other founders. From left to right, we have Ari. So his background's in marketing, and he's done marketing work for clients like Nike and Mercedes. And then in the middle, we have Diane, who's helped a range of different businesses grow over the last 20 years. And then Hank, who's a childhood friend of mine, um, who's a software engineer, and he kind of helps us build cool tools that we and the creators can use. And then we also just have some advisors. So from left to right, we have Nick, who's a licensed CPA. He's got his own firm in LA. Like myself, he actually really likes cars. And then we have Vasi, who's really experienced with PR. And then Cassie, who's actually come on as a founder. She's actually in this call. If you wanted to say a few words.
Hi, everyone. I came on to work with Priyesh because I love what he's doing because it is so creator focused. And I have a food blog myself, and I worked at Raptive for quite a while doing creator marketing for the top food creators. So I know kind of the nuances. I mean, both in how you talk to somebody and also in those, unique types of situations like ingredient write-offs and all those different types of things that a lot of traditional accounting firms don't know. And Priyesh and just knows all that space so well, and he's so great at speaking in real terms versus over your head and all this accounting jargon. So it's been really great to come on board with him.
Thank you. And then Elliot, who's also a childhood friend, and so he's worked at like banks and Amazon and kind of technology related roles. Just quickly, yeah, why Lucia was created. So when I was a content creator, I remember I was probably 2 or 3 years into studying accounting, and I then realized, okay, I need to like file my taxes. And then I rang like a dozen accountants, and then they asked like, what do you do? And then I'd explain that I was doing like content creation. And then there'd be this like pause, and you'd think, did they just hang up on me? And then half of them kind of didn't know what content creation was, and then the other half seemed like kind of they pretended they knew, but they didn't. And so I kind of just ended up doing the tax returns myself. And even like having studied accounting, it was quite confusing, and there's just so many rules. So I can only imagine how difficult it is for someone who didn't study accounting. Secondly, I'm not really like a huge fan of like the corporate kind of nature of accounting businesses. So I worked in corporate for a while, and you have to kind of talk a certain way, dress a certain way. I wasn't really a fan of that. Um, and then yeah, we kind of want to grow with you. Like the problem with a lot of accounting businesses, I find, is they like to bucket their clients based on how much money that they're bringing in for the accounting business. So those like big corporations, they get kind of the VIP treatment, and then everyone else is kind of put to the side. Um, Whereas I prefer, yeah, just focusing on one particular niche that we really enjoy. And then lastly is a lot of our team members have experience in the creative world, and we really enjoy it. What I'll do real quickly is kind of maybe walk you through the tax process from start to finish, explain it kind of in a simple manner. And then when I do that, I'll kind of answer a lot of the questions that were sent through. But yeah, feel free to just shout out any questions, and then yeah, we have like a Q&A at the end so we can go through it. And then I can distribute these slides afterwards in case I skip over anything, just in the interest of time. And the reason why it's important is because a common question people ask is like, what can I deduct? But if we take a step back, like the first question is whether you have like a hobby or a business, because if you have a hobby, you're not allowed to deduct anything, whereas with a business you are. And so, yeah, we'll kind of go through everything. Just to note that, everyone's tax situation is different. I practice tax in a lot of different countries, and America by far is the most complicated. It depends on a lot of situations, like where you live, are you married, do you have student loans, medical bills, etc. So a great starting point is always to talk to a tax professional before making any kind of like big decisions. I'll use a hypothetical example. So Lucia needs to file her 2025 tax returns. She lives in California, and she earned $10,000 as a part-time content creator. And the first step is, okay, am I a hobby or a business? And the IRS essentially have these 9 factors that they look at. It's kind of annoying because there's not a set number of factors you need to meet in order to be classified as a business or a hobby. You kind of just go through it, apply judgment, and then make the decision. I won't go through all of them, but like, for example, one of them is the manner of business. So if you're operating like a business, so you have like a separate bank account, that indicates it's more like a business. And then time and effort. If you're spending a lot of time creating content, then that kind of indicates it's more business and not a hobby. There is this kind of like exception rule where if you've made profit in the last in 3 of the last 5 years, then you're automatically a business and you don't need to apply these factors. The next kind of step is understanding the different types of business structures. Like there's all these like terms that get thrown out, like sole proprietor, LLC, S Corp, but like what does it actually mean in like plain English? With a sole proprietor, that's what you are by default. So if it's determined that you're a business, you're instantly a sole proprietor. You don't need to register, you don't need to pay any fees. It's ideal, and there's no admin. But then the next step up is called an LLC, or a limited liability company, and you have to register for that. You pay a registration fee, and then you have to pay an annual fee, and that depends on what states you are. So like in Lucia's case, because she's in California, it would cost her like $800 to renew every single year, and it doesn't even matter if she makes no income or not. Like California is quite expensive. The two advantages with LLCs is better legal protection and privacy. So legal protection, because if someone sues the LLC, let's say for $100,000, and that LLC has $20,000, then they can't come after your personal assets. You kind of have the shield between yourself and the LLC. They're like treated as two different individuals. Whereas with a sole proprietor, it's risky because they can come after your personal assets. And then the second one is just privacy benefits. When you register an LLC, you can pick your own name, and then you get like this employer identification number, EIN. And so when you're signing contracts with brands and stuff, you don't need to put your actual name and your social security number. And then lastly, we have an S Corp. It's only really recommended if you're making above like $75,000. And it's just a type of LLC. So like you have to register as an LLC first, and then you can elect to be an S Corp. And then just quickly on why, like the benefits of an S Corp versus like a standard LLC, if we use numbers. The problem with like a standard LLC is you have to pay self-employment tax on the profit that you made. So let's say you made 100K, you pay 15.3% off that. But with an S Corp, you can pay yourself a salary, and you only pay 15.3% on that salary and not the remaining amount. So that's kind of, the benefit, but it's recommended if you make like 75,000 or more, just because there's a lot of like admin involved. Like you have to do payroll and then file other paperwork and stuff like that. So just like a quick summary so far. So we've established that Lucia has a business, not a hobby, based on those 9 factors. She has a sole proprietorship, and she might register as an LLC in 2026 and not an S Corp, because she expects her profit to be less than 75K. The next kind of step is, okay, what taxes do creators actually owe? And you have 3 kind of main ones. So you have your self-employment taxes, and then you have your federal tax, and then you have your income tax. So if we look at the first table, we've got income. So this is everything that comes into your bank account. So a common question is, are gifts taxable? So it depends if there's conditions attached to it. If there are conditions, then you do have to put it as income. For example, let's say someone sent you some clothing or something, but then they require you to review it, then that would be income. Whereas if you received gifts, but there's no conditions attached to it, you don't need to report it. So then the kind of next question is, okay, like I've received a gift, I have to do something. What value do I actually record it at? And you kind of typically just do like, what would a reasonable person have bought at the time? So let's say you got 3 nights at a hotel or something. You would just look at, okay, what's the price of that hotel at that particular time, and then just use that. When it comes to income, also, it doesn't matter if a brand or a payment processor doesn't send you a 1099, which is just like a form that shows how much money they've paid you. You have to report everything in income. Even if you like make $1, you have to like put it in. Below that, you have expenses or deductions or write-offs. It all means the same thing. We'll touch on that more because people have questions like, can I write off my office? And we'll touch on that in a sec. And then the difference is your kind of business net income, and that's what your self-employment tax of 15.3% is applied to. When then your federal and income taxes are applied on a different amount. So it takes that 2,000 and then it minuses a bunch of like deductions that you can get. One question someone had sent through was, when should I use the standard or itemized deduction. So the standard deduction is kind of available for everyone. It doesn't matter if you have a business or not. And it's like 15,000 per person. Whereas with itemized, what you'd do is you'd have to go through the relevant expenditure and then work out the amount. And the tip is whatever one gives you the highest figure, you go with. Typically, it's the standard deduction, the 15K will outweigh the itemized. That's because the annoying thing with itemized is it's not the same as a business deduction. And there's a lot of caps on how much you can claim. So like you can put your state taxes there, but then the rules will kind of cap it. And then, yeah, you've got your kind of final number, and yeah, that's what your federal and state tax is based off. And most states will have taxes, and the rates depend on how much you bring in. And just another tip is it's worthwhile setting aside 25% of everything you earn into either like a high interest savings account or a S&P 500, just because the taxes can add up. Like 15.3% is just the self-employment alone. I'll quickly just touch on sales tax, but it's kind of like a beast on its own. There's like two criteria, and you only need to meet one in order to register for sales tax. So if you have physical presence, if you have like an office, employees, or inventory in a state, you have to register there. And then there's like a sales threshold, which varies per state. Typically, it's $100,000. And then the type of products that sales tax applies to, all states, it applies to physical goods. Most states, it's digital as well, so like courses and ebooks. And then quarterly taxes, you have to pay quarterly taxes if you expect to pay more than $1,000 in federal and self-employment tax the next year. So say you owe $1,000, you then pay $250 every quarter. And it is worthwhile doing so because the IRS charge an interest per quarter. So they don't just take the annual amount and times it by 7%. They actually look at it on a quarterly basis. And there's a bunch of different ways you can calculate that, because a valid question would be like, how in the world do I even like know how much tax I'm going to owe the next year? So there's like different methods that you can do. Like you can just take last year's tax that you paid and divide it by 4. And then the next one is, what can I actually deduct? Before we kind of go through it, I wanted to share like where does an accountant, or where can you actually look for like the rules? Because it seems like so many things online. The kind of first step is like the legislation, the tax code itself, and it's got a bunch of like sections for like meals, home office, and we'll touch on it. And then there's publications, which is quite nice because it's like the IRS interpreting the tax code but written in plain English, and then they kind of use a lot of examples, so it's quite nice. And then the only problem with publications is it's not law, so if they contradict themselves with the legislation, you have to go with the legislation. It is quite nice for like plain English, I feel like, explanations. The other one that doesn't get talked about enough is court cases. Oftentimes, the legislation is very vague. It's done by design. And this is the same in other countries too, where they want to catch everything. Like the tax code was rewritten in like 1986 or something, and at that time there was no internet, there was no content creation. But because their wording is so vague, it kind of captures everything. But there'll be situations where someone's interpreted the legislation, and then the IRS has gone, nah, actually, like that's not right, and they've taken you to court, and then there'll be an outcome. And so those outcomes are quite helpful, and we'll go through them. Like there was one about like someone claiming haircuts, makeup, and things like that. And that's a good place to kind of look at if you're unsure about the legislation. When it comes to meals and entertainment, so for food creators, when you use ingredients to film like a video, that's 100% deductible. Like that's perfectly fine. Below that, you've got pure entertainment. So that's not deductible. So like if you took a client to like a food festival or like a music festival, then you can't claim any of it. You can claim the food you've purchased during that trip. And then you've got business meals, which you can claim 50%. So like if you had a coffee with like a brand partner or went out to dinner, then you can claim 50% of it. And then you've got public promotion. So like if you had like a community tasting event that you host, you can claim 100% of the costs. I mean, clothing, I would say clothing is probably like the one that's misunderstood the most. I've seen people say if you buy clothing for like a video, um, because it's for your business, like you can write it off. Like that, typically that's not how it works. So you look at more, would the average person wear that clothing outside of work? So when I was in college, I used to work at like a meat processing factory, and they would give you these like overalls, massive boots. That functionally wasn't designed to be worn outside of work. And so I could write that off. Whereas a lot of other clothing, you can actually wear it outside of work. It doesn't matter if you do or you don't. The question is, would an average person wear it outside of, say, content creation? And there was a real court case where this woman, she was a news anchor, and she claimed things like her clothing, magazine subscriptions, makeup, haircut and manicures, teeth whitening, contact lenses, gym membership, and the courts pretty much denied it. Yeah, they denied all of it, just saying like, you could, a lot of it's personal, and with the clothing, you could wear it outside of work. Interestingly, there was a case where a woman was working at a clothing store, and she had to wear like real fancy clothing. And then she wrote it off saying, my lifestyle is very simple. I don't wear this sort of clothing. So like I should be able to write it off. But the court still denied it. They said it doesn't matter what your lifestyle is. It's like, would the average person be able to wear the clothing? And then home office. You can write off your house kind of expenses. There's two criteria. One is the space has to be regularly used for business and exclusively. So they both have to be met. When I was a content creator, I didn't have a desk in my room. So I would like do my work on the dining table or on my bed. And I couldn't write my house expenses because the bed I wasn't using exclusively for content creation. Like I was sleeping on it. And then with the dining table, it was used for personal. So like what I then did was then bought a desk and then put it in the corner of my room. And because that space was regularly used for business and exclusively, then I could write off a portion of my house expenses. And then kind of the next question is, okay, how much can I write off? And there's two methods. One is a simplified approach where the IRS say $5 times it by the size of that space in square feet. Whereas then you have the actual expense method, which is what I recommend and what I was using, where you work out what is the size of that space divided by your total house. So let's say it's 100 square meters. Square feet is that office space, and then 1,000 square feet is your house. That's 10%. So then you can take that 10% and times it by your household expenses related to your business, like your mortgage, if you have rent, insurance, and you can write that off. One kind of common question is like, can I write off everything, like all my household expenses? It was a question I had when I was a creator too, because at the time I had got a trampoline installed, and then we had like some landscaping done. And so like I was thinking, can we actually write that off? But you can't. It has to be related to your content creation in some way. And then travel, another common question. It's good to split.
Sorry,
So
Priyesh, on the previous slide, one quick question was whether your kitchen can count as an office space for like food creators.
yeah, it's a great question. If it's regularly and exclusively used, like if you're using that kitchen for like personal, then you can't. It has to be like exclusive, 100% business. But if you had your kitchen and then part of it was separated where like that's where you do your content creation stuff, then yeah, you can.
Thank you.
Next is your travel. So there's two things. There's the flights themselves, and then there's everything else, like the hotels, any food you buy. So they have different rules. So when it comes to the flight costs themselves, so long as your business was mainly for, so long as the trip was mainly for business, you can write the entire flight cost off. Like you don't need to apportion it, which is awesome. And then the everything else just follows the general rules. So like with hotels, you would just claim the business days. For ingredients, you can claim 100%. For coffee and things like that with clients, you'd claim 50%. The next one is car. So when I was a content creator, I had a car, and kind of two questions is one is can I write the car off itself, and then all the ongoing cost. So essentially, when it comes to the purchase price of the car itself, you can write it off, but it depends on a lot of factors. So the IRS kind of have this luxury cap where, and it's based off the weight of your car, not the value, where um, you take your car, let's say it's under £6,000, it would give you a cap on how much you can write off in the first year. Um, and then you have to kind of also determine how much is business versus personal. And they're really strict with cars. They're a lot more relaxed with like other things like subscriptions and camera equipment when it comes to documentation. But with cars, they're the strictest. Like just making sure there is a logbook and you're recording where you're going when, just so you can figure out, okay, like this is the percentage for business versus personal. And then the running cost you can also write off. There's one of two methods. So there's actual expenses. So you just add up all your car expenses and then times it by the business percentage, and then you're sweet. Um, and then there's a standard method, which is you take your business miles and you times it by the IRS's kind of fixed rate, which is 70 cents. Um, Both require you to keep like mileage log. When I was a content creator, I just used the standard mileage because I had a real cheap car to run. And so 70 cents per mile, I felt like was actually sweet. Like I wasn't spending that much in petrol and repairs and stuff. But if you have an expensive car, then yeah, the actual expenses would be better. Yeah, that's it. And then we just have like resources and stuff on the website, like a budget planner, a credit score calculation, emails there if you guys have any questions, phone number, and then yeah, a link if you guys want consultation. Awesome.
Thank you. It's really helpful stuff. I know I mentioned in the chat, but my mom's a CPA, and so she's read me the riot act on so many of those things the last 15 or 16 years, and I feel like I was sitting through a pop quiz, and she'll be happy. I'll tell her tonight. I'll be like, I knew all the answers, Mom.
I was gonna say, I think the one thing I've learned from Priyesh is that, like there's no one size fits all, and everybody's got, like, he went through so many different things and there's so many nuances to it. And so, you know, I ask him questions all the time. What about this and this? And it's just nice because he's able to sort of just tailor it at different levels. Some people are just starting, some people are established. And so I use him all the time, and he's super knowledgeable about like really looking at your individual circumstances or where you are. And also, I know some people, like you mentioned, are sort of, a hobby and thinking, oh, what happens if I'm taking it to full time or a business and all those areas in between?
The one that I was wanting to clarify from it, because I think I know the answer, fingers crossed, but when you put the standard deduction on there, that applies to your total income, right? And so, like, a lot of creators are doing this as a side hustle and might have another job. So that standard deduction of 15K, that would apply to your overall income for the year, right?
it applies to everyone kind of gets it. Like it doesn't matter if you're a business or not.
It's a good distinction.
Be great if that applied to every income stream.
Uh,
15K each time.
Well, I think that the key element that was brought up was that, because creators they have their own business and the Social Security component of that tax is kind of a little bit punitive compared to other sources of income. So getting the deductions right, like going through everything that can be deducted has a pretty significant impact. But I was going to ask, was there I didn't see, like any big changes to creator deductions or income that occurred last year?
Yeah, I didn't put anything in because there wasn't anything like major in the sense that there was like an act passed, but it kind of confirmed the existing rules that were there. And then there were like some things that might have increased, like certain deductions and the thresholds and things like that. But yeah, nothing major.
Mhm.
I have a question about paying the quarterly taxes. I've never done that. Um, and just curious if you can kind of like walk through that a little bit. Because just to clarify, I just went full time with this as my business in the middle of last year. So my need to pay quarterly taxes is just kind of happening now. So can you kind of walk through that? You mentioned the $1,000 piece.
Yeah, no. So if you expect to owe $1,000 in federal and self-employment taxes for the next year, then you have to do quarterly taxes. So you take the total amount divided by 4, and then they'll have dates that you need to essentially pay. And if you don't, then the penalties are applied on a kind of quarterly basis. There are different methods to calculate how much your quarterly payment should be, because that's kind of like the big question. It's like, okay, yeah, I think I'm going to earn like, I think I'm going to pay $1,000 or more in tax, but it's like, how much exactly? And so there's a bunch of different methods. One is you can just take the tax that you paid in the previous year, and then you can divide it by 4. And the good thing with that is if you get to actual tax time, April 15th, and your tax was different, so maybe you underpaid, then the IRS isn't going to charge you like a penalty for the difference. The problem though with that method is if you feel like your concentration business is going to like increase, then you'd think your taxes would actually increase, and so your quarterly tax is going to be too low. That's one method. The other one is just estimating every single quarter, like how much tax you think you're going to pay, and then when it comes to the end, so long as 90% of the tax was actually paid, then it's fine. They won't like penalize you. You just pay the difference. The one annoying thing though is inconsistency, where like if you underpaid per quarter, then you have to pay like a 7% penalty. But like if you overpaid, then it's like the IRS actually owe you money, but they're not going to give you like the interest on top of that unless they like pay it late. So there's that. Yeah, different methods to calculate it. Worthwhile just keeping aside like 25% or so of whatever you make just for the taxes itself.
Great, that's helpful. That's what I've been doing. I just wanted to make sure that was kind of in line.
So I have an interesting question. If you work with an accountant currently, and I work with this like on a part-time basis, it's not my full-time role as content creator, but my accountant has guided us to do whatever they've guided us to do in terms of filing each year. If it turns out that any of our taxes were filed incorrectly based on our accountant's guidance, is that something that typically would come back to us, or is that something that the accountant would be held responsible for in some capacity? Like, where does that liability really lay?
That's a great question. So like whenever you sign like a contract with like an accountant or a lawyer, they often will pass the liability on to you. So it's like oh, you have to check it, and then if it's wrong, then it's like on you. But then you can actually like take legal action against them, and that's why they'll have insurance and stuff. Like if they get it wrong, because technically, yeah, like it should be their responsibility to get it right. So yeah, if they did mess up, then you can like take them to court.
Okay, thank you.
So what I'm hearing is read the fine print in your contract.
Yeah, people are real sneaky, yeah, like lawyers and stuff.
Yes, Bill, and review your returns, of course.
Yeah.
It's hard because they're like so long and complicated, but
On purpose. They do it that way. I feel like. Does anyone have any other questions or need clarifications on anything that Priyesh went over?
I'll just echo, he said, or maybe Cassie did, that everyone's so different, and it's true. Like I I've never made enough to make it a huge thing. I mean, we just kind of roll it into our taxes that we do. But it is so different. And even from year to year, ours looks different, a little bit different based on, who know all the different things. Um, so try not to stress about it and just know it is just what we have to do. I would love to make more, so I had more to worry about, but yeah. But to
Rachel,
Allie, it is scary though, what Allie's asking about, like, who's responsible if there's a mistake? So that was a great question. So sorry, Cassie, go ahead.
oh no, I didn't mean to interrupt you. I was just going to say, Priyesh, I know one thing that you might mention is just sort of like the tracking to say, hey, how much do I need to be putting away, whether it's for taxes or like something that you wanted to purchase or a goal you have. So I know there's a tool that you help people set up on Lucia.
Yeah, that's actually one of the differences with us is we have like software engineers in house. So like we build just a bunch of tools like that creators want, and then they can kind of get it for free as part of like the accounting package. So like taking brand deals, if you want to track like your life goals and if you have certain like holidays that you want to go to, and then you can kind of track it just because yeah, personal and business is often like kind of connected together with creators.
And we were going to mention, I don't know, Pooja, if you were going to mention it, but one thing that we wanted to offer was like a free consult with Priyesh. He's like Darth Vader of taxes. Just knows everything. So yeah, so if you guys wanted to book that, I know Pooja has a link or Priyesh was going to send a link to the calendar to book it. So just wanted to offer that.
I'll definitely send that out. And I also know that we have a lot of creators who wanted to attend today, but they can't. I think people have spring break and stuff going on. And so we have lots of creators who are really excited to catch the recording as well.
Yeah, I was going to say the platform and planning, that's one of the hard things. If you do it just once a year and then you forget all the things you did during the year and how much was you spent um and so that can be really valuable as far as organization for, really something that's targeted at a creator who's got a different, you know, everything about the work is very different than, some normal paid job or something like that. So that would be really cool to check out. And I think that a lot of people would love that.
I have a question. Sorry, go ahead.
No, I was just gonna say really quick, the best part is it's talking to him is just so, you don't feel, I always get intimidated because math is not my strong suit. So when people start throwing out all the jargon, I'm like, are you trying to pull one over on me? So I always love it because he's just really, I guess relatable. So I just have to throw that out there.
It felt that way in this presentation too. I feel like Priyesh did a really good job of making these things feel conversational. Like they can feel so overwhelming and complicated, but it felt digestible.
Yeah, and if people have like questions even afterwards, just flick us an email. Like, I mean, when it's like when you go to like a mechanic or a doctor, like if they're gonna explain stuff complicated, you just like stick whatever your head like. I explain it in English, you know?
Pooja, did you have a question before we wrap up?
I did. It's more of a curiosity. And this is not any sort of comment on anything political, but I've seen a lot of people on social media talk about like not wanting to pay their taxes this year. What happens if somebody, and I'm not planning to do that, to be clear, and I don't encourage anybody to, whatever, but what happens if somebody just like doesn't file or doesn't pay their taxes?
Yeah, it's a good question. I saw a TikTok recently where someone was saying taxes was voluntary. Thought that was interesting. But yeah, you would get penalties. They're quite strict. So once they find out, then they charge you penalties. The amount of audits that happen though is like quite small. So it's like 1% of, it's like the IRS had a stat where it was like 1% of all everyone in the US, that was what was audited. And then there's kind of two types of audits. One is real chill, where they'll just kind of go in and ask you for clarification on a couple of things, like, oh, like you bought this car, you had the receipt for it. So that's awesome. And then that's quick. Then the other one's like a full blown audit where they're going to go through like every single like transaction, and it can take months. Um, that how they kind of determine what to audit is also like they have these algorithms pretty much where they'll look at like anything, any patterns or anything like that. Like they might look at your income and then they'll be like, oh, the deduction seems really high for this particular income. And it's kind of all this calculations going in the background.
That makes sense. Thank you for answering that. I was just curious.
I don't know if this is still like, that I have some old knowledge, but currently, one of the things that I had always heard was, number one is making sure you most importantly, include any income in that calculation. You can have deductions and they can be, as you said, you can go through, some questions as to whether you believe it's deductible or not. But at least if the data is there, that's different than not putting any income on a return, right? And so that would be, something that I think is a guideline that I've always sort of heard there that could be, I don't know, do you agree with that? Yeah.
Yeah. Yeah, no, that makes sense. So like when I was a content creator, what I did was when I did it myself, I pulled my bank statement and then I kind of just went all the ins, and there aren't many because you're not getting paid. Like your expenses are way more than the money that's coming in, like like line when you look at the number of lines. So I just got my bank statement and then was like, okay, these are the amounts that are coming in. And then if you have any gifts or anything which isn't going to hit the bank statement, you just add that on, and then that's kind of your total income. So the income part is more straightforward than the deductions, but it's a good place to start.
Anyone else have any questions? Well, I just wanted to thank Priyesh and Cassie, our guests, for coming on today. I think it's an uncomfortable subject for a lot of folks. I don't know, like giving up money that you've earned. It's tough, right? But understanding the rules and regulations does make it less stressful, right? You don't think you're going to get in trouble for it. And just also thank you for being a part of Food Social more broadly. Our goal is to make this community successful where all of us are working together, where we bring in people with different areas of expertise to help us build our own personal businesses. And in doing so, doing that together, that makes our community more strong. And I think this is the first of many such lunch and learns, I guess, in this year that's really helping us all level up our own business practices too. So thank you, Priyesh, and thank you, Cassie, for coming and sharing with us today. This is really valuable stuff for all of us.
Very happy to be here, and we're both very passionate about creators, especially knowing, all of the day in and day out. I mean, I have a very small blog, but I just look at all of you in awe because you have to be so scrappy and no one's, giving you any guidebook, and it's a tough job. Even if you love it, it's still business and you're still a CEO of your business. So there's that side of it too that I'm always impressed by.
Oh, yeah, no, thank you guys so much for having us. It's great. You guys all seem real chill.
Awesome.
Awesome.
Thank you
Nice.
so much.
Thank you so much. This was so helpful.
Have a great weekend.
You too.
You too.
Thanks,
Bye.
everybody. See you
Thank
later.
you.